All right, what's up, everybody? I hope y'all had a good day today. As far as trading's concerned, we were expecting a choppy day, and that's exactly what we got. How this class is going to work. So here, let me just show. This is probably the best way I can show this. This is Trader Dale's order flow video series. I'm going to be ignoring the chapter on indicators, Ninja Trader, charting platform, order flow software. The reason being is if you want the order flow software, you're going to have to buy it from Trader Dale. Sorry. So here, like you would need to buy the pack from him that includes the software, and this pack would also include the videos. So then you could watch those on your own. For my intents and purposes, I'm going to be using Quantower as my software, but this can be applied to Ninja Trader, Quantower, I believe Jigsaw charts. But anyway, my focus is going to be Quantower. And what I'll show you guys really quickly, I don't want to focus too much on the software today. Basically, anybody watching, if you decide that you want to implement this stuff, you can always just send me a DM, and from your DMs, I can give you the template for my Quantower, and then you can apply that to your chart. We are gonna, so basically Quantower, I'm not going to get into this too much right now, but if you were wanting to apply my template, which is basically the settings down here, you just right click at the top of the chart, go to apply template, and then you would select my template, and you would see the same thing that I see. As far as settings on my software, there's only two things I'm really ever looking at. One is going to be, well, basically, sorry, you click on cluster, and then you click imbalance. So I watch imbalance charts, and we'll talk about this more extensively as we get into the video. And then I also watch the single with all volume. So those are the two charts that I really look at. So imbalance, and then single with all volume. So that's that. Again, we'll talk about that more kind of as we get into this video. I will say this is going to be very advanced. And so I don't want that to discourage anybody, because it's not necessarily difficult, right? There's some aspects of this that are so simple, and if you use it, it makes you pretty deadly when it comes to trading. Anyway, so what we're going to be doing, we're going to go through chapter 3 today. It's about 2 hours of videos. I'm going to put them on 1.5 speed, so hopefully we get it done a bit quicker. And then basically what we're going to do is after every video, I'll kind of just pause and see if people have questions. And then ideally, after we've watched the entire chapter, we can pause and talk about everything. And then that way, hopefully everybody asks all of their questions. And by the time that we're done, everybody has a good understanding. And then after that, the next time we do a class, I'll do part 4, part 5, part 6, and so on. I think just 3, 4, 5, 6. So it looks like this will be like a 4-part series that we'll be doing. Anyway, hopefully that makes sense to everybody. Let's go ahead and start knocking this out. Our first video is going to be on volume clusters. And again, we're going to throw this on 5x speed, or I mean 1.5. He does have a pretty thick accent, and so hopefully it's not too hard for people to understand. But definitely he will be talking quickly. If it is too quick for you, you can always go back and rewatch the YouTube video, and you can slow it down. But I don't want this class to end up lasting 3 hours. So this for me is the win-win, is doing this on 1.5 speed. When I watch these videos, I normally watch them on 2x speed, but you do have to really pay attention to make sure you're not missing anything that he's saying. Okay. Anyway, let's get into it.
I'm going to be talking about the first strategy. I call it the volume clusters. You can trade this just with the order flow, nothing else is needed. It is a standalone strategy. I prefer to use this strategy on 5-minute charts and also on 30-minute charts. The preferred pair or the preferred trading instrument which I use for this strategy is the futures for the euro or other major pairs, but you can also trade it, for example, with the ES, which is futures for SP500, or with the oil or gold, whatever trading instrument you like. I prefer trading it on the euro, and it is one of my favorite standalone order flow strategies. So let's have a look at it. The first thing you need to do is set up your chart so it looks like mine. Only thing you need to change is the sell content. So you click it and you change it so it shows volumes, all right? So not bid and ask, but volume. When you turn on this vision.
Sorry, just really quickly. When I showed Quantower, this would be single and then all volume, like I showed you guys. It's not sell content. Okay.
Visual option, it will look like this. And every cell will show how many volumes got accumulated and traded at the given price. Now, the reason I use this volume setting is, as you can see, the heavier the volumes, the darker the gray is, like in here or in here, right? The heavier volumes, the darker it gets. And this is the core of the strategy, because you want to follow the dark places, the places where the volumes were heavy. Those are the volume clusters. Now, those volume clusters work as a support and resistance zones. What you want to see is price moving away from those support and resistance zones and then testing them again. And best is to have a whole candle above or below it. So in this video, I'm going to be talking about two scenarios. One is a trend scenario, and the other one is a rejection scenario. So we'll start with the trend scenario. If you look at the picture, then there is an uptrend, strong buying activity, especially those two 30-minute candles. And within this trend, within this uptrend, there was a significant volume cluster created in here. You can tell that the volumes were heavy because the color got darker in here, in this volume cluster, all right? So this is what you want to see. And then you want to see the price move away from it. So the price goes higher, and best is to have a whole candle above it. In this case, this is an uptrend, so you want to see a whole candle above it, above this area.
When he says a whole candle, we're talking about the wick, the body, everything. You don't want any part of that candle to touch this zone right here. Okay, so that's, we do have that here. And just really quickly, I like to see at least a 30-minute candle where the whole body of the candle and the wicks and everything are either above or below my level. This is actually my favorite strategy.
In this case, we have two candles, this one and this one. The whole candle, the body and the wick, are above this support zone. And now we are waiting for a pullback. You're waiting for the price to make it back to this level. And when it does, you enter a long trade from there. The reasoning behind that, behind this setup, is that the buyers are pushing upwards and they were adding to their buying positions. You can see that in here, heavy volumes in here. Now you don't really need to read those numbers. You only need to look for dark shades, all right? That's it. So you see heavy volumes in here, then the price continues upwards, and when there's a pullback, those buyers who are adding to their buying positions should be defending those buying positions, and they'll try and push the price upwards from this level again, from this area where they placed most of their volumes, all right? That's the whole logic behind this setup. You always want to see heavy volume cluster, then price move away from it, and then retest this zone. This is when you enter a trade, right? Now, let me go through some examples. This chart is a Euro futures, 5-minute chart. There was a downtrend. This was actually yesterday. And within this downtrend, there was a significant volume cluster in here. There was actually another setup, which I'm going to be talking later, double knot setup. But I'll mention that later in another video. But in this case, you can also see that the color, the shade got darker, which means that the volumes were way heavier in here, in this area.
Oh, sorry, everybody. Let me fix this. My bad. So we're going to have to restart this. I'm really sorry. There we go. Share computer sound. I'm used to like sharing audio, meaning that it shares everything. So I apologize about that. We'll just restart this. Fortunately, we're not too far into it, so it's not a big deal. So let's restart.
Hello guys, in this video I'm going to be talking about the first strategy. I call it the volume clusters. You can trade this just with the order flow, nothing else is needed. It is a standalone strategy. I prefer to use this strategy on 5-minute charts and also on 30-minute charts. The preferred pair or the preferred trading instrument which I use for this strategy is the futures for the euro or other major pairs, but you can also trade it, for example, with the ES, which is futures for SP500, or with the oil or gold, whatever trading instrument you like. I prefer trading it on the euro, and it is one of my favorite standalone order flow strategies. So let's have a look at it. The first thing you need to do is set up your chart so it looks like mine. Only thing you need to change is the sell content. So you click it and you change it so it shows volumes, all right? So not bid and ask, but volume. When you turn on this visual option, it will look like this. And every cell will show how many volumes got accumulated and traded at the given price. Now, the reason I use this volume setting is, as you can see, the heavier the volumes, the darker the gray is, like in here or in here, right? The heavier volumes, the darker it gets. And this is the core of the strategy because you want to follow the dark places, the places where the volumes are heavy. Those are the volume clusters. Now, those volume clusters work as a support and resistance zones. What you want to see is price moving away from those support and resistance zones and then testing them again. And best is to have a whole candle above or below it. So in this video, I'm going to be talking about two scenarios. One is a trend scenario and the other one is a rejection scenario. So we'll start with the trend scenario. If you look at the picture, then there is an uptrend, strong buying activity, especially those two 30-minute candles. And within this trend, within this uptrend, there was a significant volume cluster created in here. You can tell that the volumes were heavy because the color got darker in here in this volume cluster, all right? So this is what you want to see. And then you want to see the price move away from it. So the price goes higher. And best is to have a whole candle above it. In this case, this is an uptrend, so you want to see a whole candle above it, above this area. In this case, we have two candles, this one and this one. The whole candle, the body and the wick, are above this support zone. And now we are waiting for a pullback. You're waiting for the price to make it back to this level. And when it does, you enter a long trade from there. The reasoning behind that, behind this setup, is that the buyers are pushing upwards and they were adding to their buying positions. You can see that in here, heavy volumes in here. Now you don't really need to read those numbers. You only need to look for dark shades, all right? That's it. So you see heavy volumes in here, then the price continues upwards, and when there's a pullback, those buyers who are adding to their buying positions should be defending those buying positions, and they'll try and push the price upwards from this level again, from this area where they placed most of their volumes, all right?
So this part was not planned, but this is yesterday, right at the market close. So, I mean, you can look at this if you want, but this would be a large volume cluster here. And we had the full body candles above, retest, long, right? But the scenario he was just talking about, this is our uptrend, right? And then they had a little bit of selling here, and then we have a really big, I'm going to delete this so it's easier for you to see, but we had a really big volume cluster that came in here, like 20,000 orders, almost 16,000 orders, right? And so they pushed price up. They created a large volume cluster up here at the top, but they also created a poor high, right? We have our full body candle here, and this is on a 1-hour time frame. So he was saying we want to see at least a 30-minute candle that fully opens and closes above or below. In this case, we have a 1-hour candle that fully opens above and below. Unfortunately, I don't think I can do anything about the echo. You guys might want to just watch on YouTube. There should not be an echo there. He comes down, retests, and then from here, this is where you would enter long and play it to the upside. So literally, this is the exact scenario that he was talking about. And even if we look at the video, you'll see here we have the high volume cluster. and then they create a high volume cluster at the top where the selling is initiated. And then when we come to here, you buy and get back in. And it's literally, and again, this was not planned, but it's literally the identical setup. Uptrend, high volume cluster, selling, buy here, play it to the upside. This strategy works so well, it's just unbelievable. Just to show you guys really quickly, this is an account that I opened in July 20. I guess I probably opened it July 27th. My first trade was July 28th. This was a $2,000 account. And in 6 weeks, using only this strategy, actually just really quick. So 3 days made $334, right? This month, where I missed a lot of trading days, I made almost 1.5K. And then September, trading almost every day, made another 1.35K, for a total of 3,161 from a $2,000 account using only that strategy. That's how effective this is. This is like deadly. Okay. Let's get back into the video here.
Right? That's the whole logic behind this setup. You always want to see heavy volume cluster, then price move away from it, and then retest this zone. This is when you enter a trade. Right? Now, let me go through some examples. This chart is a Euro futures. 5-minute chart. There was a downtrend. This was actually yesterday. And within this downtrend, there was a significant volume cluster in here. There was actually another setup, which I'm going to be talking later, double knot setup, but I'll mention that later in another video. But in this case, you can also see that the color, the shade got darker, which means that volumes were way heavier in here in this area. So you wait for pullback to this area again, and this is where you place your short. You can place the short either at the place where the volume cluster begins, so short from here, or from the place where the volumes are the heaviest in the volume cluster, which is in here. Either way works. All right, now let's move on into another example. This is also futures in Euro 5-minute chart. There was also a downtrend and significant volume cluster created in here. Those four. You can immediately tell if you look at the chart that there were massive volumes created there. Probably some algorithm was selling aggressively in this place. So what you want to do is wait for pullback. You want to see at least one whole candle below this area. In here we have 3 of them, 3 5-minute candles. Then there's a pullback, and from the heaviest volume peak, or from this place, from the place where the volume cluster started, you enter a short. Now another example is on futures on the Euro. This is a 30-minute chart. In this case, there was a strong uptrend, and there were heavy volumes in here in those 3 candles in this area, or mostly actually just in here, the middle one. Not really in this one, but in the middle one, and then also in here, but mostly in the middle candle right there. Heaviest volume peak is in here, so you wait for pullback, you enter your long from there. Now you can wait for confirmation when the price hits this level, but you don't need to. I'll be talking about the confirmations on the order flow confirmations later in this video course. So you can use the confirmations to confirm the long from there, but you can also trade this without the confirmation. So you can just enter your long from here at first touch. All right. Now another example, there was a very strong sell-off, again on the Euro, futures on the Euro, and this is also a 30-minute chart, so there was this sell-off. Then the price retraced back to this area again, and this was the significant volume cluster. And this is where the price reacted and went again into a sell-off. Now, if I had a 5-minute chart, it would probably be easier to read than a 30-minute chart, but I hope that you're able to see that too. Now, when there is a strong downtrend, like in here, I usually prefer to trade shorts from the heavy volume clusters, like in here. I'm not really into taking longs against such a significant downtrend, all right? But if you look, for example, in here, there were also heavy volume cluster right there, and there was also a nice reaction, around 15 pip reaction, which is more than enough for intraday trading, all right? So this would be another viable trade, but it would be risky because it would go against strong downtrend. So next example is an example on the futures on the Australian dollar. Again, it is a 30-minute chart. There was a strong uptrend, and within this uptrend, there was this heavy volume area. Now the beginning of the heavy volume area was in here, and this is exactly where the price reacted, as you can see right there. All right, so when you see this volume cluster, you just wait for pullback. When the price gets there again, you press long. All right. Now the last example of this volume cluster setup is on the ES, which is futures for Standards and Poor's index. And currently this index is very volatile. So you can see if you look at the chart, the volatility is just crazy. But there was a really significant volume cluster area here. Now, in cases like this, it's sometimes a bit hard to tell exactly where the area is, where the significant volume cluster is, where it starts.
Just to be clear, for me, I don't look at this. I look at the darker part where we have the larger orders, the 6,300, 6,800. I can't see what this one is. 6,000, almost 6,000 here as well. I really just focus on the larger numbers. If there was a pullback that bounced here, I would miss the trade, and it's not a big deal. I'm never worried about missing a trade, but I never want to be in early and then getting stopped out because I got in too early.
And where it ends. So usually it's just best to watch the whole area, this whole support area, and wait for some confirmation when the price hits this area. As you can see in here, the price reacted to the beginning of the thickest volume cluster in here. But it could have as well reacted somewhere in here or somewhere in here. So that's why you want to see some confirmation to tell you that buyers are jumping in and you want to enter along. All right, but don't worry about it now. You will learn about the confirmations later. But again, as I said, you can trade this also without confirmations. The worst case scenario is that you'll just miss a trade. All right, but I guess that it's not so bad. Now, the other way how you can trade this setup is when there is a rejection. Now, what rejection means is that the price goes one way, then it turns and suddenly goes the other way. In this example, the lower prices got rejected. That's why it's called rejection. Because lower prices got rejected, the buyers rejected lower prices and pushed aggressively the price upwards. They completely turned the price development. The strategy in this case is very similar as in the previous case. Again, you use the volume settings, and those volume clusters, which you are now familiar with, show support and resistances. And what you're looking for is a volume cluster which is created within a rejection. So you're not interested in a volume clusters created, for example, in here or in here or in here, but you are interested only in significant volume clusters within a rejection. So as I said, this is the rejection. And in this case, the significant volume cluster is in here, those three. That's a strong support. Now, what you want to see is the price moving away from it, as in the previous case. So there is the rejection. This is the support. This zone is the support. And you want to see the price moving away from it, like in here, whole candles above this support, at least one whole candle above it. You need to see the strong rejection, right? Now, when the price makes a pullback to this area again, to this support area, you want to go long. You want to enter a trade which will be in the direction of this rejection. So in this case, along from there, all right? And again, you can wait for some.
So this doesn't look like much. And for people that have been, following me, that follow my classes, this is going to be either single prints or a strong high or a completed auction, right? So whenever you have that, you're not looking to play it all the way back up to here. You want to be closing before you get near that strong high, right? This doesn't look like very much. I don't specifically trade this, but I know this is a lot of money if you caught this trade, just as a little FYI.
Beautiful confirmation, but you can also just press the long the moment the price touches this area. Both those ways are okay. All right, so that's the rejection. Let me now show you some examples. Now you always want to first look for a rejection like this. This is a strong rejection of lower prices, which means you will be looking for longs. And only after you see the strong rejection, you will start looking for significant volume clusters within the rejection, all right? In here, very massive volumes right there, those two. You can tell if you look at the shades, they are way darker than the rest. And also if you look at the numbers, 800 contracts in here, 600 contracts, and all the other numbers in the candle are way lower, around twice or three times lower than that. All right, so this is the significant volume cluster. This is your support. There is the rejection. The price goes above the support, and when it makes a pullback and hits the level, hits this support, you go long. Now, another example, this is a 5-minute chart on Euro futures, 5-minute chart. rejection of higher prices, and within this rejection, there is this significant volume cluster with heaviest volume peak in here. So if I draw a line,
So just to be clear, I would be, for me, I would be grabbing this 43 or 434 and the 551, like basically those two right there. And I would be entering short when we came up to the 434 level. I don't know exactly where that lines up. I guess it's this line here. So I would have been red just a tiny bit on the trade, which I'm fine with.
then this is the level you want to go short from, right? So there's the pullback, and when the price hits this level, you go short from there. Now this is also a 5-minute chart on the euro. There was a significant rejection of lower prices in here. I had to zoom it out a bit because the reaction came the other day, so it wasn't that soon. This was the significant volume cluster, those volumes right there. You can also identify the support or the volume cluster a little bit bigger, maybe like this. But the heaviest volumes are in here, all right? So let's mark this area, and this is where the price turned. This is what you want to see, all right? Reaction to the heavy volume cluster created within the rejection. Now another one is on the ES. As I said, currently, when I'm doing those videos, the ES is very volatile. I'm doing this during the coronavirus crisis, so the ES is acting a bit crazy. So that's why the volatility is that big, but still, those setups are viable to trade. This is a strong rejection of lower prices, and this is a significant volume cluster within the rejection. So this is the support zone. You wait until the price makes a pullback to this zone again, and from this zone, you enter along. Either you enter without a confirmation, I would enter without a confirmation from this heavy volume node, from this place, or you can wait for some sort of confirmation from this area, all right? Now the last one, the last example, is on the euro dollar. This is a 30-minute chart, strong rejection of higher prices in here, very nicely visible volume cluster created in here within the rejection. So what you do is you wait for the pullback until the price reaches this area again. Now I had to use two charts because two levels were like 3 days apart, so it's just better visible to do it like this. So after like 2 or 3 days, the price returned back to this area, and this was the reaction to this significant volume cluster. All right, as you can see, the euro is also pretty volatile. That's just what the coronavirus crisis did to the markets. All right, so that's for the last example. Those are the volume clusters, one of my favorite order flow trading strategies. Remember, you don't need to look at the numbers of the order flow, you just want to look at the shades of the order flow. If it's hard for you to see the shades, you can go to order flow settings and set it to a little bit darker color than the gray color, or you can also change the opacity. Currently I have the opacity at 200, but you can change it, for example, to 250. And when you do that, you'll add a little bit more contrast to the charts, and those volume clusters will be a bit better visible. But what you can see on your screen is the settings so which I use and which are okay for me to analyze the market with the order flow. All right, so anyways, that's for this video. Thanks for watching, and I'll see you in the next one.
All right, so that's the first video. If you guys have questions, now would be a good time. And I actually just realized for people that want to watch this, for people that are in my mentorship group, I'm going to go live in the general voice chat. I'll share my screen there, and that way you can watch it without a delay, and you can unmute yourself and ask questions if you have questions. So I just went ahead and shared my screen, and that way, if you guys would rather watch there, you can. So this is literally what he just covered is my literal favorite trading strategy. It works so well. About a 70-80% win rate. I guess I didn't show that, but when I showed you guys my trade log on that small account, this account went from, again, like I said, I grew it 150% in about 6 weeks, roughly. I didn't like actually count, but it's pretty close. You can see up here, the win rate percent is 70%. Doherty, you got to mute yourself. Your mic is major echo. Doherty, can you mute yourself, please? Or I'll have to mute you. Okay, I'm going to mute you. All right. So you guys that just joined in the mentorship group, if you have questions, like please feel free to unmute yourself and ask your question. Doherty, I gave you like 3 opportunities to mute your mic and you didn't, so I had to server mute you. If you want to talk, you're going to have to ask me to unmute you, and I will, but for now you're muted. But anyway, point being, this is a 70% win rate. I'm not doing anything crazy, literally just following the order flow, entering, on retests of rejections or bounces like you talked about, and then also like the continuation of trends. Every single trade here is based on that. And I specifically wanted to do this account before I did this video on order flow, just so I could literally show how well it works. This, unfortunately, like this doesn't do math very well, because it's saying that I'm only making $1.14 for every like trade won or lost. But that's not the reality, because like every trade is not the same size. So like my take profit level and my stop loss might be smaller on one trade and larger on another. And if I take a loss on a bigger trade and then get a win on a smaller trade, it skews this number. Whereas this number here, total profits divided by total losses, a profit factor over 1 indicates a profitable trading system. So you can see I'm way over 1. This is 2.66. This is so effective. Just that one video. That one video alone is like pretty much everything you need for a profitable trading system. The only things that I would add to that would be like you want to use your poor highs, poor lows, strong highs, strong lows, just to kind of figure out where to close your trades. But other than that, like it's everything that you need. Okay. We'll hop into the second video here. Doesn't look like anybody has questions so far. And I will also just add, this is for futures. I know it seems like a lot of people are intimidated to trade futures, and you shouldn't be. It's not anything crazy. It's actually a lot easier than trading options, because you don't have to worry about Greeks. And if you guys want more information on it, I have videos on my YouTube channel on trading futures, and basically the stuff that you need to learn. I'm not going to cover it again today just because it would be redundant, but I do have videos on it that cover everything very well, and you don't need a ton of money to start. Let's get into the second video now.
Hello. In this video, I'm going to be talking about multiple node trading strategy. You can use this strategy as a standalone strategy, which means that you can just use it with the order flow software, nothing else.
Oh, sorry. I just wanted to add one last thing. He did mention this, but just in case you guys didn't hear, the last strategy of trading the high volume clusters is a standalone strategy, meaning that you don't need any other confluences. You just enter your trades based on where the orders are.
Is needed with that. You can enter with confirmations on Delta or any other confirmations, which I'm going to be showing you in next videos. But you can also trade this strategy without any sort of confirmation, which means that you can just enter your trades at the first touch. Just when you see this strategy or this trading setup form, you can just trade it without looking for any sort of confirmation. So let's go right into it. With this strategy, what you want to see is 2 or more high volume nodes, like in the picture. This is high volume node, so in every footprint, the place where the heaviest volumes got traded is highlighted like this. This is the high volume node, heaviest volumes throughout the whole footprint, throughout the whole candle. And what you want to see with this strategy is 2 or more of those high volume nodes next to each other, like in here. Now, there are actually 3 conditions which all need to apply. So you need to see 2 or more of those high volume nodes appear at the same price level. So in this case, you can see that those 2 nodes are at the same price level. It is at 1.0921. They are at the same price level. So this is the first condition. The second condition is they are next to each other. So those 2 footprints are next to each other, and those 2 nodes are next to each other. So that's the second condition. And the third one, this double node or this multiple node needs to be in a significant area. And this significant area either is before the trend starts or within a trend. That's this case, there is a downtrend, and this double node got created within the downtrend, all right? So this is this case, or another significant area is in a rejection. So if there was, for example, a rejection of higher prices like this, the price made a sharp rejection, and there were two footprints at the top, for example, like this, then you would be looking for a double node in here, or a multiple node somewhere within the rejection area, all right? So that's the significant area. You need to see the double node in such an area. If you don't see that in a significant area, then I don't consider it a valid trading setup, all right? So those three conditions all need to apply at the same time. This is important, all right? And you need to see two or more next to each other. Now, the setting which I use for this strategy is the volume setting. So you can set it up in here in the cell content. You set it up for volumes. The chart will look like this with the nice gradient colors of gray. And those levels which you are going to find are strong support and resistance zones. So this level is a support and resistance zone. In this case, this is a resistance zone, all right? This is a resistance. And what you want to see is that the multiple node forms and then price moves away from it, like in here. The price moved downward, and best is to have a whole candle or more candles above or below it. In this case, the price is moving downward, so you want to have two or more whole candles, wick of the candle included, below this double node. So this is first candle, this is second one, this is a third one, 3 candles below it. And then you want to wait for a pullback, so you enter a trade when price makes it back to the multiple node. There is the pullback. This is the resistance. So this is where you enter your short. And as I already said, you can trade this with a confirmation or without a confirmation. It's up to you, what you prefer. All right, so that's the description. Let me now go through some examples of how we can trade this strategy. So in here, this is Euro futures. It is a 5-minute chart. I like to trade this strategy with 5-minute charts or 30-minute charts. Well, you can also use, for example, 15-minute charts or 1-hour charts, but what I prefer is 5-minute or 30-minute chart. As you can see on the 5-minute chart, there was a downtrend, and within this downtrend, there was this double node here. So what you do next is you want to see one or more candle below this double node. So there is a plenty of them in here in this area, and you want to see a pullback to this level. This is the resistance. This is the pullback. This is where you enter your short. All right. The logic behind this setup is very similar to the setup which I showed you before, the volume cluster setup. Now, in an area like this, in the heavy volume nodes, big volumes got traded, big volumes get accumulated, and this means that big guys are entering the market. Now, in this
I have myself muted. Sorry. So what I was just saying is I like to watch this on 30 minutes. 5 minutes is fine, but when you see this on 30 minutes, you have what is probably massive institutional buying happening here. And so what happens is, like, let's just say they want to get like 2,000 orders filled on ES, right? And they put their order and a few get filled, and then price moves away from there and the order stays there. And then when price comes back to here, they get filled, you know, for more of their contracts that they were trying to get. And since they're the largest participants in the market, you'll see that massive order flow coming in, you know, side by side in that same area. And so again, let's just say they're trying to get 2,000 contracts, and here they get whatever 700, and then here they get another 700, and then when price pulls away and comes back, their order's still sitting there, and then they get filled on their last 600 contracts, which then sends price lower, right? For some reason, YouTube's not getting enough data. Hopefully you guys are not lagging over there. Sorry, I don't know what I could do other than like go and restart my modem and restart everything. But let's get back into the video.
In this case, the big guys entered the market and then they pushed the price even lower. Then there was the pullback, and what you expect is those big guys to defend their selling positions and push the price downwards again. All right, the high volume node identify the big guys. They identify them because the big guys trade with the biggest volumes, all right? The most important price levels are always those who have the heaviest volumes. So that's the logic behind this setup. Let's move on into next example. In here, there's a multiple node at this price level, those 3 nodes. Then the price went below that, and this was actually like a start of a trend. Not that strong trend, but there was a visible selling activity in here, very aggressive selling activity. So you wait for pullback. This is the resistance. This is where you want to go short from, all right, from this triple node. Now let's move on into another example. This is a 5-minute chart, and in here we have 2 nodes next to each other, but also what you should notice is those 3 nodes in here. I know that there is not a node in here. If it was, then it would be 6 nodes next to each other, which would really be great, but still, I also notice 3 nodes like that. Even if this node is lower, then this is a very significant area. All right, so many nodes at the same price level means that the big guys were really interested in this price level. By the way, you can also see that on the volume profile in here. This was the daily point of control, and from that, the price went upwards. This was in an uptrend, all right? So this is the trend scenario. Multiple candles above this support. Then there was a pullback, and along from there. All right, so let's move on into the next chart. This one is a 30-minute chart, and this is a thing which I also like to notice. Multiple nodes in here and in here. We already had a scenario like this, very similar one. I know that there's a sort of gap, and the node in the middle candle is in here, but still we have 2 high volume nodes in here, and then at the same price level in here. So this is sort of 4 high volume nodes almost next to each other, all right? This definitely is a significant area where sellers were adding to their selling positions to push it more downwards into the downtrend. What you do is you wait for a pullback. This is the resistance. This is your resistance level. You go short from there. Now, in case like this, it sort of seems like this level got tested. This is the level. This was the first reaction to this area. So in this case, I would probably discard the level, all right, because of this reaction. It would be a winner in the end because of this reaction when the price actually hit the level and reacted to it. But this reaction right there came just 2 pips before the level. So it almost seems like the level was already tested. All right, so let's move on into the next example. This one is a 5-minute chart. Now I'm using the 6E futures quite a lot for the examples. This is the Euro futures. I like to trade the Euro with the order flow, so most of the examples are going to be on the Euro futures. Now my point is that you don't really need to have too many markets when you are trading with the order flow, because there are quite a lot of setups which you can look for, and there's going to be action every day. There's going to be quite a lot of trades every day with the order flow, so you don't really need to have too many markets. For starters, I just suggest you use 1 market and you master it, and you actually don't need more. 1 market is all you need. So I focus mostly on the Euro futures. In here, the multiple node setup is right there at this price level. This was volume accumulation before start of the trend. So this is the first condition. Then there was a pullback and a nice reaction to the resistance, which was in here. If you look at the delta, there's nice confirmation. As the price was rotating a little bit below the resistance, you can see that the sellers were already entering their shorts because the delta was negative. All right. Now there are also double nodes in here, but I don't really consider this an uptrend. This is just sort of shy upwards movement, but not really an uptrend. And also there were no 2 candles above it, 2 whole candles above it. I would like to see a gap right there. Those candles can't be as close as they are right now, all right? So this is not a valid long setup, all right? The only viable setup is this one, short, from here. Well, actually, I missed one thing, those 2 nodes, but I don't know how the price continues from this place. So if there is a strong downtrend, if this is a start of strong downtrend, then this could be a resistance, because this double node would be formed at the beginning of the downtrend, but I don't know if the trend continued or no in here, so it's hard to say. Anyways, let's move forward into next example. 5-minute chart of the Euro futures. In here we have an uptrend, and within this uptrend there was this triple node. From that place, buying activity, 2 whole candles or 2 whole footprints above this support, which means the support got activated. When there's a pullback, you go long. And by the way, there's nice confirmation exactly on the level. As you can see, when the price made a pullback there, then this high volume node, this big number, means that somebody big entered the market, pretty likely with a limit order. As soon as this big order occurred at the price level, that would be the confirmation to go long from there. All right, but I'm going to be talking about the confirmations later. Right now, I just thought it would be worth pointing it out. In here, we have double node at the beginning.
Oops. I'm going to close whatever I can to get rid of the lag, hopefully reduce my CPU usage. DZ Jones, your mic is hot and you've got echo.
Of a downtrend. This is the downtrend. And the logic behind this is sellers accumulating their selling positions in here in this double node, then pushing the price downwards, adding to their shorts along the way to drive the price downwards, and then you wait for pullback, and this is the resistance zone. You want to go short from there. Now, what I also see in here is also a double node. In this case, in sort of uptrend. This is not a strong uptrend, but the price is moving upwards. So a double node in area like this is worth noticing. This would be the support, and you'd go long from there. And this would make a 9 pip reaction. But maybe this is a nice opportunity for do a little chart commentary in here. What I also see on this chart is a rejection of higher prices. This sharp rejection of higher prices as a reaction to this double node. And it's not usually that good idea to go against such strong reversal, especially when it happens right after this support. Because this means aggressive sellers entering the market and they go against your support, which is not good. Also, this is the rejection of higher prices. And within the rejection, there is a high volume node in here, which is a resistance. As you can see, the price reacted to it, to the rejection and to the high volume node there, and went into a selling activity from there. So what I'm trying to say is that going long from this double node could be risky in this case, all right? And one more bonus to notice, one more warning to notice, almost zero delta, and price moves upwards, which is kind of weird. When the price is moving upwards, you want to see positive delta, like in here. Not delta close to zero. This means there are no buyers behind this movement. Another reason why to be careful with a long from this support. As you can see, it worked in the end, but the reaction wasn't that great. So that long will be risky. So that was a little chart analysis. And let's now go into another example. This is a 5-minute chart of the euro. What is worth noticing in here is this double node. And also actually those nodes in here, this double node in here. All those show you that this was a significant support area. By the way, you can also see that on the volume profile histogram. So anyways, what's most important is those two nodes before the start of this buying activity, start of the trend. This is the support. Now you're waiting for a pullback, and you go long from there. All right, that's the support. There was also a triple node in here, which would mean if you traded it like blindly without any thinking where the trend is or what's happening, that would mean a short from there. But in this case, it seems a bit risky going short from there because you would go against sharp reversal, against aggressive buyers who rejected lower prices, who reacted to this setup in here and who are pushing the price upwards. All right, so going short from there would be risky. And actually, this triple node doesn't really start a downtrend. So I wouldn't really advise you trading that. So the only valid level for me would be this one, this support. Now, another example, this is a 5-minute chart of the euro. As you can see, there was a sharp reversal of higher prices. And within that reversal, there was this double node in here. What happened next is the price made a pullback. This was the resistance marked by the double node. And this was the short trade entry, right? Short from there. There are also more double nodes on this screenshot, but they are not valid trade entries. This double node right there is not in an important area. It's not in a trend. It's not really before start of a trend. And it is not in a strong rejection of prices. So this isn't a double node I would be interested about. Then there's also this one. This would be actually cool, double node in an uptrend. But what I would like to see is at least one whole candle above it. All right. So what happened was just double node formed, quick pullback and reaction, but I would prefer a whole candle above it. Not as close as in this case. All right, so that's for this example. Let's have a look at one more. There was a rejection of lower prices, and within that rejection, there was the double node. So this was a support. There were some candles above it, which is great. Pullback and long from there. Now the last example, this is a 30-minute chart on the Euro futures. When you look at the overflow chart, you should immediately see this. This is very important zone. 3 nodes in here and 3 nodes in here. Then the price is moving above this area. That's back into those nodes. This is the support marked by the nodes, and you go long from there. All right, so that's about it. That's about the multiple nodes setup. I really like to look for this setup. And when trading, I'm always aware of where the high volumes nodes are, especially when they are stacked like this next to each other. I'm always aware of that because those zones, no matter what trading instruments you trade, those zones are strong supports and resistances. All right, so that's about this video. Thanks for watching, and I'll see you in the next one.
So just a quick recap, and also if you guys have questions, now would be a great time. Oops, I'm muted over here. Sorry. So quick recap, and if you guys have questions, this would be a great time. This is, again, just where you have multiple high volume nodes, or called multiple nodes. I really like to use the 30-minute to find these, and when I do use 30 minutes, like on ES, where I have two nodes side by side, when price comes back to there, I'll generally get a good like 30 to 50 point move, like no questions asked. Like it's very effective. The only issue is you don't see a lot of double nodes on 30-minute time frames on ES. Lower time frames, yeah, 5 minutes, you'll see it a lot more often. It works, and again, it's a standalone strategy. You don't need any other confirmations. You don't really need confirmations for entry. Just when price comes back to that level, you get in and you go.
There's an echo right now.
Yeah, I've heard, and there's really just nothing I can do about it. I am streaming on in the general chat, voice chat of the Mentor Discord. You could always go there. And I'm also streaming on YouTube. But I don't...
Okay. Sorry, thank you.
No, you're good. Just nothing's changed with my audio. I don't know why there's an echo. Maybe because I'm streaming in 3 different places. I'm not sure. But I don't think there's an echo in Discord or on YouTube, as far as I know. Anybody have any questions on the multiple node?
Yeah, that last example, it looked like price kind of cut through it, but he said like it was a really good long
In
entry.
this video, I look for this setup.
Yeah, that one right there.
Yeah,
at the end.
Well, what you're not seeing, I guess, is, or what you probably don't know, is this is a huge move for Euro futures. So from here up to here, this is a big move. So if you caught this, it's good. But also, I think it's also important to always notice, like, I've noticed Trader Dale, when he shows examples, he's not only showing examples that work. So like I can show you guys a specific example of what I'm talking about. And this is the one thing that I love about Trader Dale, because it's real, right? If you're only showing wins, you're not showing the reality of trading, right? And so, you know, like in his examples, I forget which one it is. This one. So like he's talking about the open drive, where we have like an area where there's low volatility, where basically we're chopping sideways. Then you get a big move, you know, either up or down, it doesn't matter. Come back and retest that area. This would be your entry long, right? Up here at the top, we have single prints or a strong high, right? So ultimately, we would normally be closing this trade somewhere in this area here. And it doesn't look like it made it up there, right? And so even in the examples in his books, he shows examples that don't necessarily, well, in that particular scenario, it didn't work, right? And I think that's important because that's the reality of trading. It doesn't work 100% of the time, right? So I don't know, you know, like where his plan would have been to close the trade on this. I'm sure it would have been higher because this, I can't see what's going on up here. But even if this is like single prints or a strong high, you know, you would want to be closing somewhere in this range here. And it looks like it missed it, right? But again, like I can't really see all of the information to make a decision, but I would guess this trade probably did miss, but that's fine. Again, it's not going to work 100% of the time. And when we show examples, they don't have to work 100% of the time, right? So again, that's actually one of the things that I love about Trader Dale, because again, like when you're talking with real traders, we understand that it's important to show losses, right? We understand that you can't just show win, 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 because if, especially like a beginner trader or somebody that's trying to learn, see somebody that just wins over and over and over again, you're going to be like, God, like I really suck, you know? And it's going to be discouraging. Like we need to show the reality of trading, which is you're going to take losses and you have to be okay with taking losses. If you're not good at losing, you're never going to be a successful trader. Never, ever. Like you'll never make it as a trader if you don't embrace losing. Okay. So,
Okay.
Again, I think you're correct. Like I think this example did not hit the price target, and that's fine. That's the reality of trading, right? Any other questions before I move on here? No? Okay. I'm going to hop into the next video. Before this starts, I'm going to pause it. This is a 30-minute video. I'm just going to tell you guys, like, I need to run to the restroom. So I'm going to be gone for a second. But when I come back, you know, if you do have questions, just kind of hold them until I get back, and then we'll discuss them. Okay?
In this video, I'm going to be talking about trades filter, which is a pretty cool thing to use with the order flow. And what it does is that the trades filter only shows trades which are bigger than a certain number. So if you look at the chart in here, then you can see standard candles, and on the left and right side of the candles there is the bid and the ask. And if I didn't use the trades filter, there would be numbers on bid and on ask. But because I filtered out all the smaller trades with a filter, now only the biggest trades remain on the chart and we can see them. So this way we can see the biggest trades, the big guys, we can see where they placed their big trading orders. So the trade filter is great for tracking the big guys, the trading institutions. And as you can see in here on this chart, there were 3 places where the institutions, the big guys, placed a big order. In here, the 26 on bid, this 27 on ask, and this 28 contracts on bid. Now, obviously, the big guys use way bigger trading positions than that, but what they do is they do iceberg orders, which means they enter, for example, one contract, then one contract, and the algorithm does that for them, so they do this real quick, extremely quick. So we can't see them with the trades filter because they look like a small player, right? But if there's somebody really big who really wants to get in the market, who really wants to get in fast, then they don't use the iceberg, or they do it only partially, and they are forced to use bigger order. And we can see those bigger orders in here with the trades filter. Now, you don't really need to set up the order flow. I did it for you. There is a template which I created. You just use it and your order flow chart will turn into this. It will filter out the trades, it will show the candles, and it will show only the biggest trades like this. It will also highlight those zones which are support and resistance zones. I'll talk more about this later in this presentation. Template will do also that, but there's one thing which you'll probably need to change if you want to trade some other trading instruments than currencies. And this thing, you can find it in indicator settings, and in here you can change the trade size, the minimal trade size it will show. So if this number is 25, then it will show all the trades which were bigger than 25 contracts. So in here there's 26. If this was 24, then it would show as a 0. If this was 24, it would show as a 0. All right. So for currency futures, I use the trade filter 25. But if you trade other trading instruments, you'll need to change this number, adjust it to the instrument which you want to trade. All right. Now, it doesn't really matter if this number gets created on bid or on ask. Those levels create strong support and resistance zones. And because there's no telling the order was market order or limit order, it's just best probably to not make a difference between a number which is on bid or on ask. This will be a bit more clear when I go to some trading examples. But let me now talk a bit about trading strategy, which you can base on the trades filter. First thing you want to do is you wait for a big trade on the filter. Like in here, there was a big trade, the 26 contracts, and then you watch where the price goes from there. So from this place, the price went downwards. And this could mean that there were strong sellers entering their selling positions to participate or maybe to initiate this selling activity. Now there is a condition. At least one whole candle needs to be above or below this number. So in this case, this is the candle where the number formed. This is the 26, the big number. And this is the first candle which is below this 26, all right? So in here, as this candle formed, this condition was met, all right? Then also those candles were below this number, all right? But you only need only one candle below or above. Now, what you do next is you wait for a pullback. You wait for the price to make it back to the price level where the number got created. Now the indicator will print this zone automatically, and from that place, you want to enter a trade which was in the direction of the activity after the big number got created, the big trade got created. So in this case, there was a selling activity after those 26 contracts got traded. So when the price hits this price level again, you will go short. All right, this is short trade scenario. If the price went upwards from the 26, like this, then you would be waiting for a pullback and you would go long. Now you can enter your trade with a confirmation or also without a confirmation. I'll talk about this a little bit more in the next slide. Now, this is an important thing. If the highlighted color is red, or if the number is red, which is a number on bid, it doesn't mean that you would go short. The big number, in this case, could for example be in here, and still the price would go downwards from it. And still, even though the number was printed in green, like in here, still, you would go short. All right, so red doesn't mean short, and also green doesn't mean a long. Now, you can use this as a standalone strategy. You can also use it as a confirmation strategy. I personally prefer to use the confirmation strategy. If you use it like a standalone strategy, sometimes the strike rate will be extremely high, but sometimes it will be not so good. So it won't be as consistent as if you use it as a confirmation strategy with, for example, volume profile or with VWAP or price action or other order flow strategy, like the volume cluster strategy, multiple nodes, or with the imbalances. It's always best to look at more strategies, to have, for example, more order flow windows opened on your screen, and not only follow single trading signals, but always look at the bigger picture and on confluences. All right, so that's why I prefer to use it as a confirmation strategy. It will be more consistent than if you use it as a standalone strategy. But as I said, standalone strategy is also okay to trade. It is not a holy grail, but it's nice and working intraday trading strategy. Now, I use this strategy with 30-minute time frame, but you can go into faster time frames, and you can use 15-minute or 5-minute time frame. I wouldn't really go higher than, for example, 1 hour time frame, because still this is order flow and it's most suited for intraday trading. All right, those time frames are, in my experience, the best ones to use with this strategy. What you can do if you want more trades, if you're a scalper, you can go for the 5-minute strategy, 5-minute time frame, and you can set the trade filter to a lower number, so not 25, but for example to 15 or 20. And with this, you'll get way more trading signals, and you can trade them on the 5-minute chart. But the way how I do it is I use the filter with minimum trade size 25, and I use it on a 30-minute time frame. That's for major currencies. If you want to trade other trading instruments, you will need to set this number depending on how many signals you want to have. Remember, you always want to filter out the smaller trades, so you don't want to have too many numbers in every candle. That will just give you too many signals, and a lot of them would be false. So you want to only see the biggest trades, right? Now, that's for the theory. Let's now have a look at some trading examples of this trading strategy. This is a Australian dollar currency futures 30-minute chart. And as you can see, there were 29 contracts traded in here on bid. The price went upwards. Then from that place, it went downwards. So there was a rejection. And some strong sellers entered the market in here with this huge order. Now let me repeat what I already said. It doesn't mean they entered with 29 contracts. What they could have done is enter with an iceberg order. So they, for example, entered 29 contracts, then they entered 10, then 20, and so on. And all this could happen, for example, within 1 or 5 minutes, all right? But we only see this number because of the trade filter. All right, so the big guys were entering the market in here, and they pushed the price downwards. There is a whole candle below this number, below this resistance zone. So you wait for a pullback, and when the price hits this level again, you can enter a short from there. You can wait for some sort of confirmation on order flow. I would look at a bid and ask on a 5-minute chart to see some confirmation, and then I would go short, or you can enter a trade without a confirmation. So when the price hits this resistance, you go short. All right, so let's have a look at another example. Now in here, you don't have this line printed because this line gets printed only until it gets tested, but it didn't really get tested in here. That was a selling activity. Then the price turned, and the price went upwards. What turned it is those guys in here, 32 contracts. This is the zone. This is the support zone. It's not printed because of this candle, but this is just a technical issue. The support still wasn't tested. This was the rejection, and the price went above it. This was the pullback, and this is the place for your long. All right, as you can see, number is red. The order was created on bid, and still we go long because this number was most likely a limit order, a buying limit order. And as I said in one of the first videos, a buying limit order shows on bid. All right, in here. So that's why I think this was a big player, big institutional player entering with a buying limit order, finally turning the price into a buying activity. When there's a pullback, there's a big chance that this big guy, this institution, will try to defend this area, to defend their position, and to push the price upwards. All right, so long from there. Next trading example, price went upwards, then it turned into selling activity, and right here, almost at the top, 28 contracts on the ask. And this would probably mean that those 28 contracts was a limit order for a sell, because a selling limit order shows on ask. I also said that in the video I was referring to a few moments ago, all right? So that's why it is green. That's why it could look for somebody like a buying order, but most likely this was not a buying order. Most likely this was a selling limit order. So one candle formed below it. This was the pullback. This is the resistance. This is where you go short from. Another example on the Australian dollar futures. Again, 30-minute chart. Price was moving upwards in an uptrend. And within this uptrend, there were big guys entering their buying positions. In here, also in here. This is the support. So as the price was advancing upwards, those guys wanted to add to their buying positions or enter their buying positions in here. Then one candle formed above this area, this one, and then there was a pullback which hit this support level, and the price went upwards again. Those buyers were defending their buying positions, and they pushed the price upwards. Another example on the Australian dollar, there was volume accumulation area. The price was rotating, volumes got accumulated, as you can see also on the volume profile. Then the price shot upwards, and those guys who entered their 31 contracts in here were defending their buying positions when the price hit this level again. This is the reaction. Those guys were defending their buying positions, all right? Now you can also notice this 30 contracts on the bid side, and I would say that this was most likely a limit order to enter a buy. So this was probably a limit order limit buying order, and this was market buying order, all right? Both those buyers, only those guys entered with a limit order, those guys entered with more aggressive market order, probably to start this trend, all right? So strong buyers, and when the price made a pullback, they were defending their buying positions, and they pushed the price upwards from this area again. Now one more thing to notice, those 27 contracts at the top of this candle, this could mean buyers quickly and aggressively quitting their selling positions with a market order. And as you can see, this area got tested.
I just realized I was talking with my mic muted. I'm sorry, everybody. I was saying I was surprised that he kind of ignored this, and I guess now he's talking about it. These were your sellers on the bid. And when they came in, you know, we ended up with the full body candles below. This is your retest to enter short and take it down to where these buyers were and then reverse to long. And it looks like now he's going to talk about that.
In here, the price did not quite reach the area it missed by one tick, but this area worked also as a resistance, and then there was the reaction to it. Now another example shows really strong buying activity in here. Most likely buyers entering with market orders, those guys, those guys, those guys, and this area is a support. This whole area is a support. The program didn't print it, because this green candle get in a way, it sort of tested it, so the program didn't print it, but the support is still not tested. And as you can see, the price went above it, then slowly returned back, and then you go long from there. This is the reaction you want to see. Again, you may want to wait for a confirmation somewhere around this support zone, or you can just enter with a limit order at first touch. Now you've probably also noticed that there was support in here. It would be a long from there, but in this case the strategy would fail. This one would be a losing trade. The reaction to the buyers came later.
So perfect again. Never afraid to point out where a strategy doesn't work, right? Because that's the reality of trading, right?
Market reacted to those buyers, but not to those buyers. All right, so next example. Also the futures for the Australian dollar. Price was going downwards, and there was a big market order as the price was progressing downwards. Somebody was entering their selling positions quickly in this downtrend in here, 27 contracts on bid. So that's market selling order, most likely. And when the price hit this resistance level again, those big guys were defending their selling position and they were pushing the price downwards. So this is the reaction you want to see. Now there's also a reaction to some old support from here. This is the reaction. And also there is this support which got tested. Let me detail that. So this is the support. Buyers were pushing the price upwards. In here they were entering with market orders. This is probably a limit order, but it doesn't really matter. If it was limit or market order, this was a support. Price went above it, returned back with a pullback and long from there. If in the future the price hit this support, the lower one, it would also be a long from there, all right? Now another example, there was a rejection of lower prices, and within that rejection there were buyers entering their positions in here and in here. As you can see, there were 80 contracts, as a huge number. Now, after that rejection, we have two supports. First in here, second is in here. The price made a pullback. Those buyers were defending their buying positions. They pushed the price upwards from there. And also, those buyers from here were also defending their positions. I would say partly in here, but also partly in here. If I was trading that, I would probably taken only the first trade, this one, and when I saw this reaction, I would discard the lower trade, because it would seem like this support got already tested. Alright, there's also one more in here, those 38 contracts. There was this rejection of higher prices, and those guys probably placing a sell limit order, that's why they show on bid. There is one candle below that, and there is a pullback to this zone, which in this case is a resistance, and you go short from there. Now another example, this is a rejection of higher prices, aggressive rejection, and in that rejection, 26 contracts. By the way, this is 6E, which is Euro futures. So this is the rejection, 26 contracts within the rejection. This looks like a market order, selling market order. It seems like the sellers want to aggressively turn the price downwards. That's why they used the aggressive selling order in here. So they pushed the price downwards, created this resistance, then there's the pullback, and this is the reaction. Those sellers defending their selling positions. Now there were also aggressive sellers in here, 48 contracts, and those were created in this downtrend, in this selling activity. So somebody was quickly entering their shorts in here to jump into this selling activity, to participate in it. So this level turned into a strong resistance. Those sellers should defend it. There was a pullback, several candles created below that level, and this was the reaction. This was the sellers defending their selling positions in here. All right, so in this screen, two possible short levels. This is first one. This is the second one. This is a crazy volatility on euro. Strong selling activity, really strong sell-off. Aggressive sellers entering in here, 25 contracts on bid. This is most likely market order, market selling order. This is a resistance. The price went below that level, was rotating below it, and there was the pullback. And in here, that was the reaction to the resistance. Those sellers trying to defend their selling positions, creating this selling activity in here. That's around 17 pips, more than enough to bank a profit. Now another trading example, this one is on the Japanese yen futures. The price went upwards and then it aggressively turned, made a rejection of higher prices and went downwards. Within that rejection, 66 contracts created in here. This is most likely a market order, market selling order. sellers entering the market aggressively in here at this price level. So this is a resistance, price is rotating below it. Then there is the pullback in here and short from there. Those sellers rejecting higher prices again, defending their selling positions and pushing the price into a sell-off. In here there is a similar scenario, only reversed. It is also on the Japanese yen futures. There was a rejection of lower prices, 32 contracts traded on the ask side of the candle. And this most likely means aggressive buyers entering the market with buying market orders, turning the price upwards. So when there is a pullback, this level is a support. Those guys are defending their buying positions and pushing the price upwards from that support. All right, so let's have a look at another example. In here, this is also the Japanese yen futures. There are two filtered trades, this one in this area. The price goes upwards from this area, and this indicates that those guys were buyers, and because they placed their orders on the bid side, they entered, if they are buyers, they entered with their limit orders, which makes sense because when there is a rotation, they didn't need to hurry anywhere. They waited until the price hit their waiting limit orders. So that's how I think they entered their trades in here. Those would both be supports, this and this. But since the price already reacted to the first one, I wouldn't really advise you to trade the second one, because it could be that this was one trading institution. We'll never be able to tell, but anyways, this support seems to be spent with this huge reaction. Now this is a last example, also in the futures. There was sort of uptrend in here. Within that uptrend, 27 contracts on bid. If this was buyers, then it would mean that those buyers entered with a limit order, and this big order of theirs means a support. So that was a rejection of high prices. Price went into a pullback to this area, reacted to those heavy volumes in here, and the price went upwards from there. Alright, so that's how you use the trades filter. I like to use those big numbers in a trend or in a rejection, as you already saw. It's always good to think of what happened in the market, whether it's a market order or a limit order, but you don't really need to do that all the time. You can just trade this blindly and just follow those highlighted zones. Those will point you to strong support and resistance zones. Alright, so that's for this video. Thanks for watching, and I'll see you in the next one.
So if you have any questions on this, now would be a great time. I actually don't use this strategy. I don't have the ability to filter orders in this way. And it's very effective, but I also don't feel like I need it, as you know, the high volume clusters, the multiple nodes, that alone is enough for a really good trading strategy. And I don't have issues, you know, finding a nice setup, a good trade from day to day. So this is good enough for me. I would like to just kind of cover one thing that he said here. I'm sure you guys heard it, but I'd like to emphasize it. He was saying, you know, there's a big buyer here and also a big buyer here. So this is support, and this is also support. Price moved away. We're waiting for the pullback and the retest. On the retest, we got that big move, which kind of invalidates this lower level. And that there's a very good chance that these could be, you know, just one institution getting their orders filled, you know, in this range, right? And he also said we have no way of knowing that. But the important thing that he said is this was our entry, and we go from there. If price comes back down to here, we don't expect them to bounce again. Like, this has already been respected once, and we don't want to be chasing, right? So there's always like a good setup. You just have to be patient and wait. And you don't want to be trying to play the retest of a retest, right? So I just think that's one important thing that he mentioned that's worth emphasizing. And this wouldn't just apply to the trades filter. This applies to really anything, right? Most of my strategies involve taking retests, and I'm never looking to take the retest of a retest. Okay. You guys have any questions before we move on?
Yeah, I have a question.
Okay.
So, I remember you were talking about like ES and the Nasdaq, the futures, and you're saying on the footprints, you know, some high volume nodes are a lot larger than the other. It's all relevant with the numbers. Like, you know, on his video, you're seeing like 35 kind of small numbers relative to like ES. So as long as the relevant size is like large. You're just looking for large compared to what's around there, because without the filters.
Yeah,
You know what
so
I'm saying?
whatever you're trading, you're going to be looking for what's large relative to whatever future it is that you're trading, right? So I'm loading up my software really quick just so I can give actual examples. Because really, like, my goal in this is for people to walk away and not have questions, right? So I want to try to be as detailed as possible. Sorry, this always takes a second to load. This here is the bane of my existence. I can't tell you how many trades I've missed because I see a good setup. I run to my computer, I open my software, and by the time it finally opens, it's already price has already moved away from my entry, and I don't chase. So I'm like, okay, I guess I'll get the next one.
Yeah, that would require a lot of discipline to not chase.
Yeah, it does, but I mean, it's just you just learn, with time. It's just not worth it. I think as I was growing as a trader, as I was learning, there was so many times where I would have, dude, it looks like for whatever reason it's not loading again. They could be doing updates right now because it's the market's closed for the hour. They did this yesterday as well. What I can do is I can pull up a screenshot. Let me just do that. I'll leave that open just in case it does open. And I'll pull up a screenshot for you guys really quick. But anyway, what I was saying is, as I was growing and learning as a trader, you start to, like when you chase, you end up getting stopped out and then the move happens. And, like you just basically learn over time, like that was not a good idea kind of thing. So if we look at ES, so he was talking about a rejection, right? A strong rejection. So this is what we have here. We have a strong rejection. And in that strong rejection, I guess up here it kind of starts. 13,000 contracts, 12,000 contracts. And you can see relative to everything else, like that's massive, right? Down here, we also have 13,600 contracts. But it looks like our biggest cluster is right here, almost 15,000. And so this is significantly bigger than everywhere else, right? And then our confirmation of this is price moved away. We have a full body 1 hour candle below, full body 1 hour candle below, full body 1 hour candle below. I don't know what's to the left of here, but obviously I have it highlighted because there was a high volume cluster over here. And then our confirmation that this, I mean, I don't use confirmations. I place my order and I just let it go. But when you see these 13,500 orders come in here, that's your confirmation they're about to send this, right? And so they literally, this is at the beginning of a trend, right? They came back, hit this, you enter long. And then up here at the top, again, we have this high volume cluster. You close your order and you reverse short ultimately. It would have took a little while to play out, but it finally did. But then you can see up here, again, this is our confirmation to enter this trade, 22.5, 26.5. This is significantly larger than everything else, right? So does that make sense?
Yes, perfect sense. Thank you.
Okay. I wanted to show NQ as an example as well, because on NQ, you'll see the orders. It'll be like 56, 80, and then like 150 is actually like a fairly big size for NQ. If you see like 300s, 400s, 500s, that's actually like a very large volume cluster for NQ. But unfortunately, looks like they're doing maintenance. My charts are not loading. It's just stuck on connecting. So unfortunately, I can't show you guys live examples. But I guess at least we have this. All right. Any other questions on that before I move on? Or any questions on anything before we move on?
Trader Dale, I know uses Ninja Trader all the time. I think he's using
Mm-hmm.
that right there as well. I mean, maybe you don't know, but on Tradovate is those settings should apply somewhat like where I could get the single bid and the ask combined, right?
I don't believe so.
No, okay, all right.
I don't think Tradeovate gives you access to order flow like that. I talked about this at the beginning. The only software that I know of that allows you to do this would be Quantower, which is what I use. Ninja Trader, Jigsaw charts, and I think there's another one. Actually, I can probably Google it really quick.
I've been using Apex, and I'm trying to figure out how to. Well, I will end up using Quantower on there. We'll switch.
Let's see. Sierra Charts, Ninja Trader, ATAS, Bookmap, Market Delta, Go Charting, and Exo Charts. It doesn't mention Quantower, but Quantower does as well. Okay.
Okay, perfect.
Yeah, I mean, I would highly recommend if you have a Windows computer, definitely switch to using Quantower.
All right, right on.
All right. Next video.
Hello
imbalances.
guys, this video I'm going to be talking about imbalances. What imbalance? One side of the market is more aggressive or stronger than the other side of the market. To see the imbalances, you need to have the bid and ask setting for the order flow. So not the volume setting, but the bid and ask. You need to see the bid and the ask of every footprint. All right, so let's first have a look in here. This is a selling footprint. And in a selling footprint like that, or in a downtrend, the sellers are way more aggressive than the buyers. They place a lot of market sell orders, and this way they are able to push the price downwards. There's a selling pressure, all right? They do that with selling market orders. Now, selling imbalances show on bid. They show in here. This is bid, and this is where the selling imbalances show. Now, the software marks them in blue. So this is selling imbalance in here, in here. Also in here, there is selling imbalance. In here, and also in here. Those are selling imbalances. Now, those blue numbers mark that sellers were way more aggressive at those price levels than the buyers. If there are a lot of those selling imbalances, that means that the sellers are really aggressive, and usually they are pushing the price aggressively downwards. Now, let's look at here. Now, this is a buying footprint. This is a green candle, price is moving upwards, and when there is an uptrend or when the price is moving upwards, the buyers are more aggressive than the sellers. The buyers are entering the market with buy market orders, and this is what drives the price upwards, the aggressivity of the buyers who are entering with buying market orders. Now, buying imbalance is also marked in blue color. You can see it in here, and it is marked on the ask side of the footprint on the right side in here, all right? So whenever you see those blue numbers on the ask side of the footprint, then you know that at those places there are aggressive buyers. Those buyers are way more aggressive than the sellers, and usually this is a sign that the buyers are trying to push the price upwards, or they are trying to get into their positions because they expect the market will go upwards. Now, what those blue numbers actually tell us is that one side of the market is 3 times or more aggressive than the other side of the market. Now, if you remember, I already talked about that. When you read the footprint, you always compare those two numbers like diagonally, all right? So you compare 20 to 25, 49 to 36, 70 to 43, and so on. And a setting imbalance appears when this number is 300% or more times bigger than this. In other words, 3 times or more bigger than this. So 7 is 3 times or more bigger than 1, all right? 10 is 10 or more times bigger than 0. Now 14 is 3 or more times bigger than 4. 29 is 3 times or more bigger than 7. 99 compared to 3, and you also compare 122 to 39. You always compare those numbers. And if the number on bid is 3 or more times bigger than the number on the offer, then it gets highlighted in blue and it says that there's imbalance. There's imbalance between buyers and sellers. Their sellers are 3 times or more aggressive than the buyers at this place. All right. Now, if you go to options, then you can actually change the percentage, but the default is 300. That's what I use, and this is what suits me, but you can change this number however you want. And another important thing I should probably mention here is if you want to actually display those imbalances and those imbalance clusters, you need to tick this, all right? Other way, it won't show. Now let's have a look at this buying footprint. In here, you also compare always diagonally like that. So in this case, 51 is 3 times or more bigger than 1. 115 is 3 times or more bigger than 27, and so on. You always compare diagonally. Those 4 numbers are imbalances. Buyers are way more aggressive than the sellers at those places, right? Now, this is how you can use this in your trading. The imbalances tell you this. One side of the market is more aggressive than the other side. You can use it when you are reading the order flow chart, when you are trying to understand what's going on the market, whether the buyers or the sellers are more aggressive. So the imbalances are ideal for that. Then imbalances can confirm a trend. For example, in here, the price is moving upwards and you see imbalances appear in the footprint. Then it sort of confirms the strength and aggressivity of the buyers who are pushing the price upwards. So imbalances confirm a trend. When there are a lot of imbalances, the trend is very aggressive. The buyers are in control and the trend is strong and likely to continue. Imbalances can also help as a warning if you want to enter a trade which goes against those imbalances. So imagine you have a short level somewhere in here. Let's say this is your short level, this is a resistance, and you want to go short from there, but you see that there are a lot of buying imbalances going against your short. Imagine there are a lot of buying imbalances, for example, also in here. Then you see that the buyers are pretty aggressive, they're pushing price upwards, and especially that the buyers are way more aggressive than the sellers. So unless you see any confirmation at this level or around your resistance level, you don't really want to enter a short from there because you see that the buyers are really aggressive. So that's the warning, right? And the fourth way how you can use imbalances is that stacked imbalances show you strong support and the resistance zones, especially when those stacked imbalances formed in a trend or in a rejection. Now, what this stacked imbalance actually is, let's have a look at it. Stacked imbalance is when there is a 3 or more imbalances stacked like this. 1, 2, 3. You can change this number. The default number is 3, but you can change it, all right? And what it will do is that it will print this box when there's 3 or more of them stacked together. The order flow software will print this box, and it will tell you that this is a strong support or resistance zone. In this case, this is a strong resistance because there are a lot of aggressive sellers in here. So when the price makes it back to this level again, it's likely that those aggressive sellers will become aggressive again and they'll start pushing the price downwards from this resistance. And this is actually a standalone strategy which you can use with the order flow. Now, there's one more setting for this box. It's a pretty important setting. Imbalance cluster box draw mode. When it says until tested, then it means that this whole box will show until the price hits it and tests it. You can alter that, so this box will, for example, show only for a certain period of time, but I like to use it this way. I like to have those printed like this until those levels get tested. And this is how the strategy should work, all right? As you can see, there are stacked imbalances in here. 3 imbalances. This is the resistance. Price reacts to this resistance. Those sellers start to pushing the price downwards. And this is the reaction. Let me show you some more examples of this simple strategy. There's a downtrend. I like to use stacked imbalances when there's a downtrend. As you can see, the sellers are pushing the price pretty aggressively. There are a lot of those imbalances in here. And in those 2 places, there were selling imbalances stacked. So this is a resistance. This is a reaction to the resistance. This is another resistance. And this is the reaction to it. That's the aggressive sellers defending their selling positions. Now in here, there is a buying imbalance, strong buyers pushing price upwards, creating this stacked imbalance right there, 3 imbalances. So the software creates this highlighted area and it marks a support. This is the reaction to it. Also, aggressive sellers appear in here at the start of this aggressive movement. So this is a resistance zone, the price hits it, and this is the reaction to it. This is how you can trade the stacked imbalances. Now, here is how you can actually trade it. You can trade it as a standalone strategy. This is what I showed you. You just wait for this to appear, and then you automatically enter a trade. This is not a holy grail strategy. It won't work all the time. Sometimes it will work as a charm. Sometimes it won't really give you any good levels. So be careful. I wouldn't really prefer to trade just based on this, but still it is a very good thing to have in your charts, to watch in your charts, and to add to your strategies. So what I actually like more is to use this as a confirmation strategy. You can use this as a confirmation strategy with volume profile, with a VWAP, with price action, or with other order flow strategies like the volume cluster strategy or multiple nodes strategy, or with a strategy with a trade filters. You can combine all those and look for strategy confluences when more trading strategies point to a strong support and resistance level. All right, so for example, when you're trading with volume profile, there's a significant volume area. You're not sure where exactly to place your level, or you're not very sure if this level is strong or if you want to trade it or no. You can use the order flow, look at the area, and if there is stacked imbalance there, you have that level confirmed. That's how you can use it. You can use it on any time frame you want. I like to use it on a 5-minute time frame and on a 30-minute time frame. And you can also use this strategy on any trading instrument, but important thing, you need to adjust it. You'll probably need to adjust it. So for example, you will need to adjust the percentage from 300, for example, to 200 or to 400, depending on the instrument and depending on what you prefer, how many signals you prefer. And also you may want to change the number of those stacked imbalances. Maybe if there is a very volatile trading instrument, you'll want to have, for example, 5 of them at top of each other to start printing this highlighted area. But for the Euro futures, which I prefer to trade with the order flow, I use 300% and I use 3 stacked imbalances as a default. Now let's move forward. I'm going to show you the standalone strategy, how we can trade this as a standalone strategy. So in here, the software pointed out this imbalance, those 3. So this is a strong resistance area. By the way, this is a 5-minute chart of the Euro futures. This is the reaction to the resistance. Another example, this is a 5-minute chart. This would be sort of scalp trade actually. Those are stacked imbalances, stacked selling imbalances, which means aggressive sellers in here. And as you can see, those sellers are defending this resistance zone. And this is the reaction to it. There's also a second one, but this zone is already tested, so I wouldn't really trade it in here, only this first test. All right, you always want to see the price to move at least a little bit below that imbalance, like in here, and then make a pullback. All right, you always want to see whole candles below the resistance because you always want to have the pullback. Now, another example, there are actually 4 imbalances in here, 1, 2, 3, 4. Aggressive sellers in here, and this is the first test. Now the software will print this area, this highlighted area, until the whole area gets tested. That's why it didn't stop in here when it got tested. All right, that's how it was made. The whole area needs to be tested before this highlighted zone disappears. All right, another example, this is also a 5-minute chart. There's imbalance in here, and also there was some buying imbalance somewhere on the left. So this is the buying reaction to that. There's not really any significant reaction to this zone, to those imbalances, but there's a nice reaction to those imbalances right there. Now in case like that, when you are not sure which one to pick, you may want to look at another trading strategy, preferably for some heavy volume nodes or trade filters or volume clusters within this zone. And this could actually help you to decide where to place your short. So for example, if there was a heavy volume cluster in here or significant volume node in here, then you would go short from there. You always want to trade from the heaviest volumes. Now another example, in here there is a stacked buying imbalance right there, but it haven't been tested yet. But there is a second one in here, also strong stacked imbalance. This is the pullback to this area, and this is the reaction to it. In here, this is a very nice example. There's a downtrend. I really like using those imbalances in a trend. In here you can see that there are 4 stacked imbalances creating this resistance zone, and this is a nice reaction after a pullback. What's also worth pointing out in here is that all those candles have negative delta.
I want to say something here really quick, just because for me, regardless of the outcome, obviously this worked. But this to me looks like it's in the middle of a trend. when I'm looking for imbalances to trade off of imbalances, I find there's a much higher success rate if you look for the imbalance at the beginning of a trend, not in the middle. So I personally, I wouldn't take this. It's kind of hard to say what's up here, because if price is just trading kind of around this area here and then comes down, this is still technically the beginning of a trend. But if this goes much higher, then this would be in the middle of a trend, and I would not take this trade regardless of the outcome. Again, just because it worked doesn't mean that it was a good trade.
Which means more aggressive sellers than the buyers, which tells you that the downtrend is most likely going to continue. All right, so let's go into the next example. This is a 30-minute chart of the Euro futures. There is a stacked buying imbalance in here, and I really like this one because this is a rejection of lower prices. So this imbalance, this stacked imbalance, actually showed within the rejection. So this is the support, price makes a pullback, and here we go. This is the reaction. Another one in here, very nice example of the stacked imbalances in a downtrend. So sellers are pushing the price downwards, and at this place you can really see the aggressivity of the sellers. 4 stacked imbalances right there. This is the pullback, this resistance area, and this is the reaction to it. By the way, if you look in here, a lot of buying imbalances. So this trade would actually look pretty risky before the reaction because of those aggressive buyers showing up. All right, but apparently those sellers were way more stronger, way more aggressive. So those buyers didn't really get a chance, and the price just went into another sell-off from there. Now, another nice example of the stacked imbalances. Also, in a trend, strong buying activity in here, you can see that there were a lot of buying imbalances in this whole area, but the only place where they were stacked was in here. So this marks a strong support. The price made a pullback into this area and reacted to it very nicely. Now, the last example is actually a screenshot from today. As I was preparing this slideshow, this very nice reaction to a stacked imbalance occurred on the euro. There was a strong downtrend, and within that downtrend, stacked imbalance in here. Aggressive sellers adding their selling positions and pushing the price even lower. This was like 2 or 3 days ago. That's why I used 2 charts, so it's not too zoomed out. And this is the reaction to it today. This is the reaction which occurred like an hour ago. All right, so that's the stacked imbalances. That's the standalone strategy you can trade with stacked imbalances. Now, I showed you a lot of nice examples, but please keep in mind that there are also trades which will fail. There are also very nicely looking stacked imbalances, and the market won't react to them. So this strategy is not a holy grail, because there is no trading strategy which would be a holy grail, all right? Keep that in mind. The best way how to trade this, I think, is in a confluence with some other indicator or with some other trading strategy. All right, so that's it for this video. Thanks for watching, and I'll see you in the next one.
So I found imbalances give you roughly about a 50%, 60% win rate, specifically if they're used where the imbalance occurs at the beginning of a trend. I have a couple of examples from like my own charts. Unfortunately, when I took the screenshot, I didn't zoom out far enough to show that this imbalance occurred at the beginning of a trend. But so this is NQ, and this is massive. I mean, we came down, tapped the level, and ran, and this is you know, a good, gosh, 110 points, give or take, on this trade. And just for math, every point on NQ is $5. Is that right? No, sorry. Every point on NQ is $20. So every quarter move on NQ is $5. Every point is $20. So if you multiply that by 110, one contract would have been $2,200 on this trade. Or actually, up here there's a very small imbalance you can kind of see. That probably would have been like a good place to close your trade instead of trying to bink the top. But even still, I think it's still roughly 110 points, give or take. Okay. Another example here, kind of the same thing. This is also NQ. I didn't, again, zoom out enough to see where the imbalance occurred, but you can see there's some smaller imbalances above. So like based on the color coding that I use, the green is 300% larger, yellow is 600% larger, and then this is yellow, but these are double stacked, meaning like, so here there's two greens. So this would be two greens here that are 300% larger than the sellers. And then this here is two yellows stacked where it would be 600% larger than the sellers in this instance as well. And down here we have a triple stack of the yellows, 600% larger. And this would be your entry long from there. And then you can see also, if you've been following along, when this happened, we have a completed auction at the bottom. And then also, this is 900% larger than this. So the buyers, this is the bid side. So most likely this is limit buyers. When price came down here, there was a lot of buyers waiting, completed auction. And from there, they probably bounced really well. And then again, this is NQ. And like I was talking about, the sides aren't combined, but you can kind of quickly do some math where you start to see, like 600, 500, 400 is your significant nodes versus ES where you see like 25,000, right? So I guess that's a good reference for the last video. Anybody have any questions on that before I move on? Nope. Okay, this is going to be our last video for this this class. This will basically conclude the order flow trading setups. And then I'll shoot to do a class next week, hopefully. And then we'll go through the next chapter. And we'll try to knock this out in like a month time frame, basically. In 4 weeks, do a chapter per week.
Hello, this video is about unfinished. Let's start with what the unfinished business is. It is an imperfection, or you can also call it a failed auction. You probably know it by the name of a failed auction. Now, if you look at those footprints in here, then this footprint, and this one show successful auction. You can tell that there is 0 at bid on high, in here, in here, in here, and that there is 0 at ask at the low, in here, and in here. When the prices change, when markets move, this is basically a never-ending auction, right? When the price goes upwards, then it turns and goes downwards. It means that there are no buyers willing to buy for higher prices, so the price turns and goes downwards. Then, at this place, there are no sellers willing to sell for lower prices, so the price turns again and goes upwards. This is how market moves, and this is why there's always 0 at those places, at those lows on ask, and at the highs there are zeros on bid. Now let's have a look at this footprint. In here there is 14 contracts traded on bid and 29 on ask. So if this was a successful auction, this would need to be 0 and 29, but there's 14. So this is failed auction. In here, the buyers were willing to buy for higher prices, but the price turned and went downwards. And this is sort of weird. This is sort of like if you went for an auction and you wanted to buy a house, and there were 50 people willing to buy for 1 million, then 20 people willing to buy for 2 million, 2 people willing to buy for 4 million, but then there wouldn't be the one winner who would buy the house, let's say, for 7 million, but suddenly the auction would close. That would be weird, right? It would be weird, because there wouldn't be the one last buyer to win the auction and buy the house. And this is exactly the same scenario. Only difference is that market is never-ending auction. It goes up and down all the time. It never ends. Like if you're buying a house, the auction just stops when there is last buyer and this one gets the house. But this is a weird scenario because the buyers wanted to buy for higher prices, but the price turned and went downwards. So this is why it is an imperfection and why it is called unfinished business or failed auction. Now what the software which I developed does for you is that it prints a line, this green line in here, at places with unfinished business. You only need to go to settings, there's unfinished business setting, and you need to pick this, detect unfinished businesses. Alright? If you tick this, then the program will automatically print a line like this, green or red, And this line will show until it is tested, until the price tests the unfinished business. So now you know what the unfinished business is, that it is an imperfection. You know where to turn it on, and now I'll show you how to use that in your trading. First thing, this works as a magnet. This is an imperfection, and the market tends to deal with that imperfection. So in this case, there is an imperfection in here, so the market will likely test this area and create a successful auction in here. So it works as a magnet. This works as a magnet. Price is likely to test it. Price is likely to return to it. But there's one important thing. The price can move away a lot from that area. So maybe you already had an idea, then when you see the unfinished business in here, the price goes away, you immediately go long because it should work as a magnet. No, the price can move away quite a lot. So this is not really a good trading strategy. I know that some people trade it, but it's very risky. How you can use it is as a take profit. So let's say that there was some trading signal in here. Let's say that there was a support based on volume profile or order flow. You went long from there, and you know that this will work as a magnet, that the price will most likely return to this price level. So you can use it as a take profit, one tick above it, right? Because if the price goes one tick above it, it will create a successful auction out of the failed auction, out of the unfinished business. So this is one way how you can use it. Now you can use it also as a confirmation. Imagine there's an uptrend. Then this is a pullback. This is what you see in here, those footprints. This is a pullback. And let's say that there's a support in here. Now you have this support created inside the uptrend, and you are not sure if you want to go long from this support or no. Maybe this support doesn't seem that strong, or you are not really sure about it. But you see the unfinished business in here. And this is very nice confirmation of the trading idea to go long from this support. Because it should work as a magnet, the price should get back to it, and if there is a support in here, it's a good idea to enter long from there and quit your trade one tick above this unfinished business. All right, so that's the confirmation. Another way how you can use it is sort of warning against bad trades. Imagine that there was, for example, some uptrend like this, and you are thinking about going long from a support in here. Let's say that there were, for example, heavy volumes in here, so it should work as a support. You would go long from if there was a pullback. But if you saw that in here there was unfinished business in here below the support, then it is a warning that going long from the support would be risky, because the unfinished business or the failed auction would work as a magnet, which could result in the price shooting past the support towards the magnet, creating successful auction. All right, so you can also use it like that. And one more thing, it's a bit similar. Don't place your stop loss at the unfinished business. Don't place your stop loss in here. If you are, for example, short from this area, then don't place your stop loss in here, because it works as a magnet and the price will tend to test this area again, which would result in you taking a losing trade. It would trigger your stop loss. All right, so those are ways how you can use it. The main idea behind this, which you always need to keep in mind, is that unfinished business is a magnet. That's the most important thing you should always remember. All right, so let's move on a bit. The unfinished business is not a standalone setup. As I said, it helps in trading decisions. It can, for example, help to decide whether to stay in a trade. So imagine you are in a long, there's a pullback, and you're not sure whether to quit your long in here, but there's failed auction in here, so you know that it should work as a magnet. So the price will most likely go upwards again, test this magnet, test this unfinished business, create a successful auction, and possibly continue upwards. So it can help in decision making. As I already said, it can also help decide where to quit your trade. So it can help to decide where to place your take profit, and also where the price is likely to go. All right. All this is based on the fact that the unfinished business works as a magnet. This can be used on any market, but it can't be decentralized. So you can't use it on Forex, but apart from that, you can use it on any centralized market, and you can also use it on any time frame. What I prefer is 5-minute time frame and 30-minute time frame. All right, so that's for the theory. Let's now jump into some examples. Those should make it way more clear. Now this is Euro futures, 5-minute chart. This is exactly what I was talking about. There is an uptrend, then there is a pullback. So let's say that you're not sure whether to quit your trade. You're not sure if the trend is not over yet, but then you see that there is this green line, there is the unfinished business in here. So it's pretty likely that the price will test this area again because it will work as a magnet. This unfinished business in here will work as a magnet. So you should remain in the long at least until here, until this place. You can stay longer, especially if you see those crazy buying imbalances. Now that's something. But at least it should tell you that the uptrend is not over yet, that the price will most likely return at least to this price level to test the unfinished business. Now, next example, also Euro futures, 5-minute chart. In here there was sort of rotation, and there was unfinished business in here, so there is the red dotted line. And as you can see, the price tested it quite soon, one tick below, and then went upwards again. It worked as a magnet. Now in here, this is also the same chart, Euro futures 5-minute chart. The price was slowly progressing upwards, but created unfinished business in here, which means sellers wanted to sell for lower prices, but still the price went upwards, which is weird. It's really weird. So it worked as a magnet, the price went back into this area, and right there it tested the unfinished business. And as you can see, this also started a downtrend. In other words, it would be pretty risky to hold longs when you have this at the bottom. All right? It's risky to go long when there's the unfinished business in here. Now in this example, also the same chart, price goes downwards, then there's a pullback, and you're not sure whether to quit the trade or no, but there's the unfinished business, so you know that the price will at least test this area again. So if you are in a short trade, you may want to quit your trade in here or to remain longer in a short because of the unfinished business, all right? Again, it worked as a magnet. In this case, it only took 10 minutes before the price tested this area again and created a successful auction out of this unfinished business. Now, in this example, there was sort of rejection of lower prices, and at the bottom of this rejection, there was this unfinished business. The price went upwards from there, but eventually the market turned and tested this area. Again, it worked as a magnet. It didn't take too long for the price to return back. It was not even 2 hours, and the unfinished business was dealt with. Now in here you can see the market covering those unfinished businesses pretty effectively. There's one in here. This is where it gets covered. Also one in here, and this is where it gets covered, all right? It's working as a magnet. The price returns to it. In this example, there are 4 unfinished businesses. If we start from left, then there's this one, which gets tested probably somewhere in the future. Then there's this one. It gets covered in here. Then this one gets covered in 10 minutes, pretty fast. And also this one, which got covered immediately. So I wouldn't really call it an unfinished business because this is just where another candle started and the price just covered that unfinished business. All right, so as you can see, those unfinished businesses are working nicely as magnets. The price tends to return to them. In here, there was a buying activity, then a pullback. And let's say that you had, for example, a support in here. You were not sure whether to enter along from there or no. Let's say that you were not so sure about the support. Let's say that the support were those imbalances, those buying imbalances, but they are not stacked. They are not stacked imbalances, so the signal is not so strong. But given the fact that there is the failed auction in here, the unfinished business in here, it should work as a magnet. So the chances are higher that the price will react to those imbalances, and then the magnet will help you in your long, all right? This should be the take profit, 1 tick above the unfinished business. Now imagine you are in a long position in here, then there's a pullback, you're not sure whether to quit your trade or no, but there's this unfinished business. This line should work as a magnet. So you stay in the long, the price turns, then creates those nice buying imbalances. And in case like that, I would stay in the trade. I would not quit it 1 tick above the unfinished business. I would hold it until I would see some signal to quit the trade. So I would hold it, and the signal could be, for example, unfinished business in here. As you can see, worked as a magnet. It could also be the negative delta in here in this footprint. Now another example, there is this rejection of higher prices. Then this is a strong sell-off, you see those imbalances, aggressive sellers pushing the price downwards. Then the high volume node is in here, which is a nice resistance zone. Let's say you're not really sure if you want to enter short from this area, but you see that there is a magnet, there is unfinished business at low of this footprint. So what it tells you is that it will most likely work as a magnet, right? This level should work as a magnet. So this should push you over the edge and tell you that you should go short from there, from this high volume node, enter short. And in this case, I wouldn't really quit it one tick below the unfinished business. I would hold it because of this, because of the selling imbalances. This is strong selling pressure pushing the price aggressively downwards. So I would hold the trade, right? I would hold the short. Now in here, you can notice this unfinished business. Let's say that there's a downtrend and you are in a short position. Now this tells you not to get crazy with your shorts because it will most likely work as a magnet and the price could turn and test this zone again sooner or later. In this case, the price continued downwards quite a lot before it turned, but it could have been way sooner. So if you see a thing like that in a downtrend, you don't want to go too crazy with your shorts. What you want to do is rather search for a place where to quit your short trade. Now, especially if you look at delta, in this case, it's pretty crazy. Look at that. Price is moving downwards and delta is in green numbers, which means buyers are entering in this area in this downwards movement. Now, this is something. This combined with the unfinished business in here should be a big warning for you, and you should be looking for a place to quit the short. Now, this is the last example. Again, you can see that the unfinished business is working as a magnet. In this case, this is sort of a rotation. Price is just making its way in a sideways movement. And all those unfinished businesses are covered pretty quickly. So this unfinished business gets covered in here. This unfinished business gets covered in here. This gets covered in here. And there's also some older unfinished business which gets covered in here. All right, so that's for the unfinished businesses. It's pretty useful to watch. It's pretty useful to have those lines on in your charts. It's pretty useful to watch them and keep an eye on them. They don't work as a standalone strategy, but they're definitely helping in decision-making process. All right, so that's about this video, guys. I hope you liked it, and I'll see you in the next one.
All right, so that does it for that chapter, everybody. For people that follow me on YouTube, we talk about this pretty often, the unfinished business, except for I'm generally referring to it as failed auctions or poor highs, poor lows. And for me, I just really use them as a place to know, is price going to break through and go higher? Or if I have like a strong high or a strong low, I'm going to want to close my trade before I get to that area. Whereas if I'm in a trade and we have, I'll just use his term right now, the unfinished business, then I know that I can at least play that trade all the way up to the unfinished business. Expect it to at least break above a little bit before we get a reversal in the other direction. So yeah, that's how I do that. Anybody have any questions on this one? Or any questions in general?
I have a question about delta. I'm not sure if you covered it in the beginning. Sorry, I joined late. Can you explain delta a little bit?
Sure.
How that works?
Yeah. I think it's actually, I mean, I don't mind talking about it now, but I think it's actually going to be in later chapters. Let me see. Yeah, I'm not really sure. I think he talks about it in later chapters. I'm trying to load up. Okay, my software is working now. Whoa. Personally, I don't use delta too often. I mean, it's good information to have, but the reason that I don't use it too often is by the time you have the information, it's generally too late. But it's good as far as like confirmation when you're in a trade. You know, like if you keep seeing green delta, green delta, green delta as you're in, like a trade to the upside. That's good. And then here the delta shifts to red. So this is actually, I think it's really just what he was just talking about. So uptrend, right? If you don't know where to close your trade, I mean, me personally, I would have closed, but up here we have unfinished auctions at the top, right? They do sell off. They end up breaking and going much higher, right? And they do have completed auctions here. But anyway, yeah, there was incomplete auctions up here. Delta is basically they're just doing the math like on if there's more on the bid or the ask. And so like negative delta would be that there's more orders on the ask, and green delta would be that there's more bid or more orders on the bid. Again, not really something that I use as any kind of a strategy, but it's not bad information to have while you're in trades. And like I said, by the time that you see it, you're kind of late for the reversal, if that makes sense. Like if you're watching green, 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 and then here it switches to red, you're probably late. This candle here, I know Trader Dale talked about this, and he talked about it while you were here. This is a green candle with massive red delta, right? And so from there, you would expect selling. So like this is a anomaly. That's something that I do pay attention to. Or like if you have a red candle with green delta, you don't see them very often. But when you do see them, it should like it should kind of like throw your spider senses tingling. So like here, red candle, green delta, right? It would generally indicate a reversal, but in this case, it didn't. Is that a good enough explanation of delta?
Yes, thank you.
Okay. Where I do like to use delta is, so on the right side of my chart, I have, you can choose whatever time frame you like. I just use current month. And it gives you, just like volume profile, we're always looking for those volume shelves as a place where you might see a bounce. So like in this instance here, we have an imbalance, right? We have like a pretty significant delta shelf here. And so when price came back to here, it's a pretty good area to expect there to be a bounce. If they lose this, there's a good chance we're coming all the way back down somewhere around here where we have like our next delta shelf, and we have that that buy side volume cluster, right?
I see.
Okay. I will just finish by saying, out of everything that Trader Dale discussed, my favorites are the high volume clusters. That's pretty much my primary trading strategy. I do also use the imbalances. For people that don't have access to these charts, I will say like your goal should be to get access to these charts, and that's easier said than done, right? So for some people, like you might need to get what's it called? You might need to go as far as buying a whole computer, right? Because these are only available on Windows PCs, and some people are like, only have a Mac or a tablet or whatever. You wouldn't be able to run these charts. So for some people, that would be as extreme as needing to buy an entire computer just to run these charts. For some people, it would just be a matter of opening an account and paying the monthly subscription fee. But when I say that, I get that that's not affordable for everybody, right? We're all in different places financially or different places in our trading journey. So I'm not saying it lightly, but I'm just saying it should be your goal to get to this point, because this information just really starts making trading much easier, where you can actually see where support and resistance is versus trying to kind of guess. You can see the actual orders and be like, oh, wow, that's a massive order. and then we have the full-size candles above. These were buyers. When price comes back to there, the buyers should show back up, right? It just simplifies it so much. And what I will say to people that either are unable or can't afford it right now, every single day I go live on YouTube, like Sunday night through Thursday night, and I cover all of the buy side and sell side high volume nodes that I see. And sometimes, like, let's just pretend we only have this candle and we don't know, what happens afterwards. I'll say we have a large cluster of orders here, but we don't know if they're buyers or sellers or yet. We need to wait for that 30-minute candle below or above. So I'll give you guys the level, and I won't specify if they're buyers or sellers. We need to wait until, we get that full candle above or below. But then you guys can just watch the chart, and see what happens and determine whether or not it was a buy side or a sell side. But so I guess the main point that I'm making is if you don't have access, you can always tune into my YouTube live every evening right around 7 p.m. Eastern, right around there, roughly. I don't go live at exactly the same time every day, but it's always right around 7 p.m. And I give these levels. So you can always grab them from there until you have the ability to get them yourself, basically. And with that said, I'm basically going to end this video, and I'm going to be going live pretty soon here on YouTube and covering these levels for today. Okay? Any questions, anybody?
Thanks,
All right.
Rockets. Thanks for answering all the questions.
Yeah, no worries. I appreciate the questions because I'm sure people would have, questions that you'd asked that, others didn't. So it's always good to get that back and forth going, to get deeper and get people thinking or whatever. So I appreciate all the questions. Somebody in YouTube just asked a question, Bob Marley. What would be some good Windows laptop choices to get? Why specifically a laptop would be my first question to you. And I'll just answer and not wait for your answer because you're on a delay. A lot of people want a laptop because they want the portability, but unless you really have to be portable, meaning that you're buying a computer that you're going to be using for work and you have some kind of career where you're traveling or you need a computer that you have with you at all times, a laptop is not the solution for trading. For one, a good laptop, if you compare specs to specs, a good laptop will be way more expensive than an equal desktop computer. A laptop, you're also going to be limited to possibly 2 screens at the most, meaning you'll have the laptop screen, which are generally small, 15 inches, and then you can connect an external monitor because there's generally one HDMI output. So you could connect a decent sized monitor to your laptop, but then you're still limited to one really small screen and one whatever size screen. And when I say whatever size, I have a 49-inch ultra-wide monitor that I use. I also have 2 27-inch monitors. So you could go quite big, but you are fairly limited. And then the other issue with a laptop is you really want, as a trader, you want a good video card. And the laptop video cards are not that great. They're okay. But you are actually rendering a lot more graphics than you would imagine. There's a lot of processing power involved in rendering charts, especially footprint charts. And so, again, unless you really need to be portable, I'm screaming buy a desktop PC. And then if you want to know specifically specs, I can kind of tell you. Let's just go to Amazon. So I'll show you the filters that I would use if I'm looking for a Windows computer. I like Intel. Um, to each their own. If you don't like Intel, that's fine. You don't have to use Intel. Um, but we're talking about what I like. I'm actually like a I used to do IT work. I don't do IT work anymore because I don't need to. For GPUs, I like NVIDIA. Again, if you prefer AMD, that's cool. You're asking me my opinion, so I'm going to give you my opinion. Um, when it comes to the processor, video output ports, I would want at least two. Okay. Actually, no, I'm sorry. I would want three, but that's less important. Let me uncheck that, and I'm going to check three. When I said two, I was thinking of two on top of like the regular output that you already have. But I know they're not thinking that way. I want three. I want to have at least three monitors. Um, I mean, when you start out, having one monitor is okay, but as you're able to, if you can add a second monitor, it's going to help you. If you can add a third monitor, that's going to be even easier, right? You're going to give yourself more. Um, why? So I already said Intel, right? Why is it not letting me choose? Like, I don't know why it's not letting me choose the socket, because let me just do it this way, because those are not giving me what I'm looking for. i7. So for me, this would be the minimum on what I would be looking to buy for a Windows PC. And then for my GPU, I would be choosing. Where is the GPU? I just saw it. Am I losing my mind? CPU. There we go. NVIDIA. And then with this, so like I already know right here, this would be a great PC. It's an i7, 2.1 gigs. The video card is insane. 5060 Ti, 16 gigabyte, 16 gigs of memory, which you can always upgrade. And a lot of times when you click on these, they give you the option to add more memory if you want to. I kind of like to go with 32 gigs minimum, but this is not a bad starting place, and I feel like it's a reasonable price. If you guys want, I can drop the link for this. But anyway, this is a good starting PC. You can always upgrade the memory, right? And iBuyPower or CyberPower is a good company. I can't tell if this is air cooled or water cooled. I'm pretty sure it's air cooled because it doesn't look like it specifies otherwise. If money is not an issue, you want to go with a water cooled computer. Water cooled computers are going to run faster. They're going to have what's it called? They're going to use less electricity. Basically, cool electronics are more efficient and run better and run faster than hot electronics. So then here's another good one. iBuyPower, again, CyberPower, iBuyPower, both great computer manufacturers. This one's a little bit more expensive, and it's a little bit of a better PC. It has a slightly better video card. The i7 is slightly faster. You have 12 gigs of GPU, and then you have 32 gigs of memory. So this one is a pretty decent upgrade. And again, I can't really tell. It looks like this one's air-cooled as well. which again is not the end of the world, but actually that might be water cooled. No, this is air cooled. 100%. There's the the radiator block or whatever, and the fan. I'll drop the link to this one as well. This is another great, like, I would say mid-range computer. And if anybody in the Discord wants these links, I can drop them there as well. But I'm putting them in YouTube because that's where the question was asked. And if we want to look at something like higher end, let's see. Let's just look at specifically like CyberPower and iBuyPower. Oh, it's not letting me do iBuyPower, but okay. Can't tell if this one's water cooled or not, because that's really like the next kind of upgrade you want. Oh, it doesn't even have 32 gigs of memory. This is air cooled. I might just go out of here and go directly to iBuyPower's page. This one's water cooled, has 32 gigs of memory. It's kind of on the pricey side for what it is. Yeah, let me just go to iBuyPower's webpage, or their Amazon page, I mean. Bro, Intel, thank you. Okay. That's over. Wow. Let's maybe just go to iBuyPower's website. I know sometimes as well, if you have a Costco membership, they'll have their PCs there as well. But so... why is this just like not loading? I think I need to go restart my internet. While we're waiting for that to load, we'll just do this as well. So this would be like the next upgrade. So we were looking at the i7 processors. These i9s would be the next step up. You're going to be paying a premium, right? Because that would be like top of the line right now. See, this one is even like air cooled, and you're looking at like almost $2,000. This is actually a really good deal. Thermal take, water cooled, i9, good video card, 32 gigs of memory. So I'll drop the link for this just in case.